First of all, growth, the number one priority of this government. Rachel Reeves said it, Keir Starmer said it, and yet it's flatlining. Joining me is Ewen Stewart of the very appropriately named Growth Commission. Ewen, we saw the budget yesterday. Well, it wasn't a budget. We were not allowed to call it that. The Spring Statement. A budget with everything but tax rises. Growth was halved from 2% to 1%. We are bumping around at under 2% growth for the next 5 years. The number one priority of this government is growth. By any metric, they're failing, right?
I think they are, I'm afraid. Britain has got a very major growth problem. The headline numbers actually exaggerate what the real position is. Why do I say that? I say that because actually what matters isn't the headline number, is growth per head of population, the per capita.
And the population is getting bigger and bigger and bigger and bigger by the year.
It is.
And not from birth, from boats and from visas.
Absolutely correct. So if you look at the last 5 years, per capita growth, per head growth has not increased at all. That is actually unprecedented in the 200-year history of this country. Never in British records has growth been so weak. And we've got to ask, why is that the case? But what I would say is that I was very disappointed in Rachel Reeves' statement yesterday.
What, dancing with tears in her eyes, putting a too positive gloss on it, or what was
to be honest, I thought it was quite delusional. I mean, she talked about fixing the edifice, but actually she'd taken a very weak edifice and just made it a little bit weaker. I think the economy is on a precipice. We've seen the OBR's forecast cutting from 2% to 1%. Magically, they think that growth's going to increase in the next few years to about 1.8% in perpetuity. I'm interested why they come to that conclusion, actually, because almost everything that has happened is anti-growth. There were no further tax rises in this Spring Statement.
This time, but...
Yeah, and we'll come on to that, I'm sure. But what I would say is we are about to have the tax rises, national insurance and stamp duty and corporation tax kicking in the next few weeks. We saw nothing in the budget to deregulate the economy. Quite the opposite. There was a complete silence.
Some of the stuff on the planning, though, is welcome to people that want to make liberalising this, make it easier to build in this country, make it easier to try and stimulate growth, right?
I think in the interest of fairness,
we are nothing but fair today.
Absolutely. At the margin, we would give one cheer.
One single solitary clap.
But I don't think that will move the dial. And the reason I don't think it will move the dial is that we're facing a headwind of higher corporation tax, higher stamp duty, and a range of other taxes. We're facing Britain's taking an extreme view on net zero, a view that, frankly, is contrary to what virtually every other major country, America is doing, what China is doing, what Russia is doing. We have the most expensive power in the developed world. And I don't see where the growth comes from. And the reason this is really serious is that public finances are on a precipice.
Yeah. The credit card is maxed out.
Yeah, despite the highest taxes. Yeah. Since Ration Book Britain, 1948, I think it is, we are running a deficit of about £140 billion. And the truth of the matter is, the OBR think that deficit is going to fall, but that is predicated on their view of 1.8% growth. If there is no growth, and I think that would be my central case, or very limited growth, that deficit will be bigger, and that will stress the bond markets. I think the country's on the precipice.
So Rachel's in a bit of a bind here, right? So she's got the Labour Party on one side, who it's not yet clear whether they're going to wear this £12 billion worth of cuts, which, on benefits, welfare, £5 billion out of £70 billion worth of welfare spending. It's barely a salami slice. On the other side, as you say, she's got the bond market, she's got the international money lenders who are already pretty unimpressed by the state of Britain as it is. Looking at the cost of long-term borrowing, that's going to go up. So she's not really going to be able to borrow a huge amount more if it does go down the Swanee, as various economists, not least yourself, are predicting. Her own party aren't going to wear any more cuts, so it is going to come down to raising money from where else, and where else is going to do it from tax rises, right?
There is that grave danger.
Yeah.
But that will create a death loop. If there are further tax rises, it will kill the golden goose yet further. And when Tony Blair was Prime Minister, God bless him.
Well, they look like sane and happy days, right?
Well, relative to this, maybe. But the private sector was 2/3 of the economy.
Yeah.
Today, the private sector is just over half of the economy. So what
Barely
has happened
just,
is, we have swapped a productive private sector for a relatively unproductive public sector. And if we want to grow this economy, I would plead with Rachel Reeves to support the private sector, trust the private sector, and try and recycle spending cuts, which are, in my view, absolutely required, because I think public spending is out of control. And I think the cuts that she talked about in the budget are, as you say, salami. They're tiny, tiny, tiny in the context of what has happened. But we need to recycle meaningful cuts in public spending towards encouraging the private sector through tax cuts and deregulation in particular.
Texts coming in. Kenny in Edinburgh, first time text to your show. Thank you, Kenny. I have spent a happy year in Edinburgh. Please tell Rachel from accounts to stop taking money from me and my family. We can't afford it anymore. She's still going to come back for more in the autumn. Can she just be honest and tell me if she wants the shirt off my back too? 87222, start your text with talk. Keep them coming. Still with me is Ewen Stewart. Ewen, we've been looking at the sort of domestic focus, but all of this could be blown up by Donald Trump as well, in the fact that he seems to be sticking to his guns with his America First agenda, and that includes tariffs. Now, economists don't normally like tariffs, but the American public don't seem to mind them too much, and it's not doing his popularity any problems, and he seems to be coming good on his word. Now, I trawled through the Spring Statement documents yesterday, as I'm sure you did, and it said there could be another 0.6% hit to GDP, so that would take it down from 1% to 0.4% this year if these Trump tariffs are put in. 25% tariffs on UK car makers. Now, you could argue that UK car making isn't what it used to be, but we do send a lot of very, very high-end luxury cars to the United States. 18% of our car exports go to the US. Is this going to be a major problem, do you think?
I think we've got an opportunity, actually.
Right.
And it might sound counterintuitive, but Donald Trump has indicated a willingness to do a trade deal with Britain.
Yeah.
Now, if you look what Donald Trump's trying to do, America runs huge deficits with the European Union, with China, with Canada. Actually, with Britain, the deficit is about neutral.
Yeah.
So I think he has recognised that the problem he perceives, and I'm not in favour of tariffs, by the way, to be clear, but isn't so much with Britain, it is with other countries, the European Union being one of them. So I think we should take him up at his offer to explore a full trade deal with the States and turn that to our advantage.
Would we be able to? We're not going to be able to do a full trade deal. I don't think this government's got the cojones to do it. I mean, they've already upset the farmers enough. Imagine what it looks like when they go into a farming deal. Obviously, we've had decades of scaremongering about the NHS. That every time anyone mentions a trade deal with the United States, they're just going to say, "Oh, we just want to sell the health service to America." And there's obviously these tariffs kick in next week. The 2nd of April, I think they're meant to be coming in. So what can we do in the next week to avoid this pain, or is it going to be a longer-term plan?
Yeah, what I thought was very interesting about Rachel Reeves, or the statement yesterday, Spring Statement yesterday, was that she blamed everyone but herself for these problems. So she talked in code about the geopolitical environment having changed. And there's some truth in that, of course.
Instability abroad.
But let's be quite clear why Britain is in trouble. It's not in trouble because there may or may not be a trade war with America. I hope there's not a trade war, to be clear. We're in trouble because we have taxed till the pips squeak. We've invested very heavily and very inefficiently in a public sector, which is, by the government's own admission, actually less productive today than it was in 1997. And we have regulated industry after industry to within an inch of its life.
Starting with the one we're looking out the window over across the river of the City of London. I mean,
absolutely. I mean, and the tragedy is that Britain still has great assets, and indeed, as you point out, that amazing view we've got here of the city on the other side of the Thames is one of Britain's greatest assets. But what did we do after Brexit? We largely copied the European Union rules and actually gold-plated in some places, when in actual fact there's a huge opportunity to create strategic advantage. And that's what we should be doing. We should be deregulating, particularly in financial services, in a sensible and controlled fashion. And we should be ditching the net zero requirement, which actually harms our manufacturing industry.
And the cost of it hasn't really been, as we've talked about on this show many times. The cost of it isn't, is barely known yet. A trillion pound hit is looking quite a conservative estimate now over the next 40 years.
I think there's a range of views as to what the cost will be, but that's your starting price.
Yeah. Just talking about costs, we talked about Rachel Reeves blaming everyone else and blaming, global factors. How much of her budget really has led her into this predicament? Because we remember the £40 billion worth of tax rises from the budget. She actually increased public spending by 70 billion. That plus 40 billion pounds of tax rises. Is that it? What policy decisions how much is her policy decisions rather directly to blame for the downgrading of growth?
Well, she inherited a weak position.
Yeah.
And actually, the weakness of the British economy has been a slow car crash over 20 years, actually, with very poor policy choices, growing the state at the expense of the private sector, increasing regulation.
Yeah, text here from Christopher that says productivity is languishing for years. He agrees with you, both public and private.
Absolutely. Things started to seriously go wrong from lockdown. I don't think the economy's ever fully recovered from what I view.
Well, a lot of people haven't gone back to work. It's the major issue.
Indeed. So many policy errors were made, but she has greatly weakened the edifice further. And she's done that by investing, in inverted commas, in the public sector, increasing salaries dramatically, increasing particularly benefits, which is reducing the desire to work. We've got 9 million people of working age in this country not working. We've got a benefits bill which has been growing in an uncontrolled fashion. And I don't see anything that she's done to discourage that. So I think a great deal of the country's problems have been exacerbated by really weak policy choices.
The other issue we've got is this workers' rights package, this employment bill that's going through the House of Commons now. Sounds nice and fluffy on the outside, but businesses are really raising the alarm. And the Office of Budget Responsibility, the watchdog, the people that mark the homework, they've basically said, we can't actually price this in because we don't know the details of it. But giving workers full employment rights from day one will make it much harder to hire people. But the OBR say there will be a net negative effect on growth. The fact that those aren't even factored into these growth forecasts, this major flagship government policy that they're going to say this is going to be expensive, means these forecasts are just kaput, right?
The risk to the OBR's growth forecasts are, in my view, manifestly on the downside for many of the reasons you mentioned. Increasing the minimum wage very substantially, also for very young people, increasing workers' rights to levels that completely undermine the competitive situation in the UK. I would just ask your listeners to consider this. 20 years ago, the average American was 20% richer than the average Briton. Today, the gap is about 60%. We would be about the poorest state in the American Union. Our wealth would be roughly where Mississippi is. Now, I'm not for a second advocating that, as Donald Trump has, that some country... I'm not suggesting that. But the point is, these cuddly reforms that our politicians, the jam today that they've offered, has actually undermined our economy and ruined our competitive position. And we're now at a critical point where the economy is crippled with public debt. And that really matters because ultimately that impacts mortgage rates and the cost of borrowing generally. Taxes are at the highest in 70 years. And I think many of your viewers would be interested in their opinion, would recognise that public services are, despite extraordinary money being thrown at it, not very good.
Yes, Joe, you cheered me right up there. That was the lovely sort of joyful start we needed to the show.
We try our best.
Yes, Joe, from the Growth Commission. Thank you very much.